Good day to all Inderes TV listeners and viewers. Tecnotree publishes Q2 results today, and on this video we will discuss that with the CEO Padma Ravichander and CFO Indiresh Vivekananda. Welcome.
Good afternoon, Ronnie. Welcome. Thank you for the opportunity.
Good afternoon, Ronnie.
So we could start off with the traditional question of Tecnotree's highlights of Q2, if you could give a small recap.
Thank you, Ronnie. I'm pleased to report that we've had a significant set of milestones achieved in H1 2024. Of course, our focus has always been on innovation, and this first H half Q2, we had introduced cost optimization. We will give you an update on that. Definitely focused on market expansion to yield positive results. I think what we have achieved is a stable financial performance with a free positive cash flow of Q2. We have also announced strategic partnerships with SIs like HCL Technologies and Emirates Integrated Telecommunication Corporation, who will bring us business in large tier accounts like Etisalat, Do, Virgin Mobile, and expansion into new logos and new markets. We also have delivered quite a few of the digital transformations this quarter and enhanced our product offerings with new features. We've also brought in a lot of much needed operational efficiencies and effectiveness, and we'll talk to it. In terms of true financial performance, as you've seen in the report, the net sales has remained resilient at 34.9, but in constant currency terms, we've seen a 5% growth in revenue, a 6% year-on-year increase in our order backlog to 72.6 million. This isn't just growth, it's a proof that our strategy is not only sound, but also future-focused. Certainly in uncertain times, we find new strength. We've also achieved very positive cash flow this quarter, and our cash flow for us is seasonal, but we have definitely achieved a better cash flow, which tells us that it underscores our financial discipline, basically, as really it's cash that fuels the future and our dreams to build better products and enter newer markets. While there's been a cyclical nature on collections, Q2 has definitely seen an improvement in cash collections and reduction in DSO days, as we have projected, and the adjusted operating result increased by 10.7% to 10.9 million euros. In Q2, we also saw a growth in net income to 2.1 million euros, excluding the one-time impairments of 2.9 million euros, which I think maybe Indiresh can elaborate the elements of that, but this was more to ensure that we are fairly evaluating our assets. And our cost optimization plans, which we will expand, have also been on track, and that helped our OPEX. And further, we also witnessed a reduction in Forex losses this quarter, but that is maybe a seasonal thing. So that's really the update on financials.
All right. Thank you. As you mentioned, you made a 2.9 million write-down from capitalized R&D and loss regarding a sale of assets. Could you elaborate, especially which asset sale was this about?
Okay, maybe I can take Padma.
Yeah.
Ronnie, as you know that we, the finance people, always want to evaluate our assets in the right way and make provisions whenever we think that there could be a diminishing in the value of those assets. The company has a very robust system of evaluating its assets frequently, and we conservatively provide for it wherever necessary. And as a part of the cost optimization and product rationalization, we do evaluate our internally generated assets. And whenever we realize that the products are not going to give us the estimated or an expected benefit out of it, we take out that portion which is not going to give us the benefit. Similarly, on that way, we did provide for an impairment of certain products within our stack. And we had discontinued certain businesses in the earlier year, and there were certain receivables out of which. And while we know that we are still getting the money from the customer, but as a conservative way, I have taken a provision so that my assets reflect conservative value. All of these are just a provisions, not a write-off. And I think that's the right way to look at it from the financial side.
All right, thank you. Regarding the revenues in Q2, they came down a little bit. So what were the main causes for this, and should the investors be worried since the new order seems to have slowed down a little bit as well?
So maybe I will take the initial part, the number part, and then probably Padma can add the qualitative aspect of that. Well, in absolute terms, yes, there is a steady revenue. It is not decreased or increased substantially. But if you look at the constant currency basis, I have a 5% growth in the first half of the year compared to the last year. And our guidance has been between 2 to 5%. So that gives us a comfort that we'll be able to achieve. And the second part is, as you know, that the whole market in which we operate is growing only at 2. And we always believe that we'll be ahead of the market and we grow more than the market is growing. The third one is the order backlog, what I have, which is a highly qualitative backlog I have. And we expect that to be converted into revenue in the second half. Again, that gives us a confidence of achieving the guidance. Probably the last one I want to reiterate is there has been a shift in the way we are operating in the last few quarters. We are moving more and more into the recurring revenue model rather than the license deployment go live model, what we were performing earlier. The earlier model had a very high revenue and a cash in certain quarters, and that used to change drastically in the subsequent quarters. Once we move into an ARR model, that will help us to have a more predictable and stable revenue and the cash inflows, and that can cause a little lower revenues in the initial period. These are some of the causes which says that we did not grow substantially in our revenue now, but these are the more stable way of looking at the numbers. Padma, any comments from you?
No, I think it's very accurately reflected by you, Indiresh. The only point I would add is we do have a healthy order backlog, and we are growing faster than the industry growth trends that have been published already by many analysts. That is very encouraging. We are seeing a lot of uptake for our products in the Nordic markets and in the European markets. We've also launched some new AI ML capability based on the acquisition we announced last year, year before last. And the AI ML use cases, the trust and governance capability that we published today in our IR results of Sensor certified product, which is really positioned to provide the governance and trust and transparency, explainability capabilities for the EU market according to the EU AI Act, are all indications for promising growth in the future.
You completed your restructuring program in Q2. Could you open up the program more in detail? For example, to which functions were the personnel cuts mostly affected?
Maybe again, this, since it involves money, I will take it first and then probably request Padma to add. The cost cutting program, what we announced, is a global program and has been exercised in the second half of the 2024. And the effect of that will be fully realized in 2025. While in the second half of the year, I will get a partial benefit out of it. OPEX to the net sales in the current year has been about 66% compared to 70% in the last year. There itself, we have gained about 4% in absolute terms. 5 to 7% of my global OPEX reduction is expected in this year. About 4.5 million, I expect the reduction, the benefit us in the second half of the year, and a full benefit of about 7 million in the coming year. The headcount, we got a reduction of about 5%. As a result of that, and moving some of the jobs into a better location cost-wise, the personal expenses came down by about 10%. The SG&A expenses came down by about 8%. And also we ensured that the travel expenses are curtailed, and even that came down by about 6%. Further, we also consolidated the real estate and the healthcare business, what we had in North America, and repurposed them towards the telecommunication service providers business, what we have. So these are some of the things which we affected in the Q2 and the benefit we expect to see in the coming times. Padma?
No, I think it's very accurately stated. As you said, we are on target so far, and you will see definitely further information in our Q3 results and Q4, and we hope to realize the cost benefits that we are working on. There are also restructuring that we are doing, that we even covered in last quarter, how we are localizing our capabilities closer to the customer in some of the geographies, gaining better return on in capital forex expenses in certain geographies. And the recent announcement of partnering with SIs, I also believe would mitigate risks on deliveries and better security of collection of cash, because we will be collecting licenses and the delivery responsibilities will be with the SIs, and we would provide the annual maintenance on our stack. So we're taking multiple ways in which continuing to grow our basis, our product penetration into the market, while being very sensitive to the impact on OPEX and CAPEX. In addition to that, I did cover this in my presentation. We have got a product rationalization program to look at the return on invested capital. Our product stack is now mature. Only in H1 alone, we added 600 new features, all poised for growth markets. We believe the maturity of the stack means we can rationalize the CAPEX expenses going forward. A typical cycle in telecom industry is about 2 to 3 years to realize the investments made in capital investments. And I think we are now poised to take benefit of those investments we have made over the last 2 to 3 years or so on the digital stack of Tecnotree.
During Q2, you also announced a partnership with large Indian technology company HCLTech. What are the main goals from this partnership, and when should we expect to see some results from it?
Again, the partnership with HCLTech is an exciting one. It's very much aligned to the overall strategy and vision that Tecnotree has for growing its business in mature markets. We believe strong global SI partnerships indicate better global reach. They act as a reseller of our enterprise software products. It also validates the fact that our products are now SI ready, means they are being ready for implementation by a third party, which talks to the stability and reliability and predictability of the products themselves. Tecnotree looks at reseller opportunities with SIs. The SIs will take on the delivery. We sell our products and licenses, which ensures more predictability in terms of our ability to collect revenues, and also reduces some of the delivery risks as we have to scale the operations in some very large, with some very large telcos in terms of requirements for delivery, and we could be more product focused. It also aligns with our go-to-market approach that we have in developed markets. In fact, we believe the reason why we are very attractive to SIs like HCLTech is mainly because of the TM Forum standards. We are one among the top leaders in terms of standards conformance. 59 real-world APIs certified by TM Forum. We also have been recognized by Gartner for revenue monetization as well as customer experience capability on the stack. And most recently, we won the AI/ML Magic Quadrant recognition as well with Gartner. So this, I believe, will increase our ARR capability through these SI partner channels over time. As we focus on product, they focus on services. And our partner strategy is not only to include global SIs, but we also work with highly specialized local SIs in different markets like Africa and Latin America. and also with cloud vendors like Microsoft and Google.
You have previously made a prepayment for an acquisition, and now that the acquisition, to my understanding, is concluded, could you elaborate more on what kind of target it is and what are the main synergies?
Thank you, Ronnie. Yes, I can. Perseus Technologies was a partner with us as we were building out our digital transformation platform. They contributed to several aspects of the product stack, which is well integrated into our digital stack today, the D stack that we offer to our customers for digital transformation. The acquisition by itself is small in nature and complete, and it was done in a timely basis. We really believe it accelerates our time to market, but it also helps in terms of improving the revenue. This year alone, we think we can expect a 3 to 5 million upsurge in order intake with this acquisition.
All right. You announced a new long-term incentive plan for your personnel, which will cause some dilution to the company's share base. So how would you rationalize to other investors why is such a high dilution necessary for the incentive plan, since it will dilute approximately 6% of the share base?
I think I can take this. Rani, as you know that we attract global talent and we are in a very competitive market for the talent acquisition. Retaining top talent as a product company is critical for our business. As you know, Tecnotree for almost 40 years had very limited employee ownership, and we believe that this is very critical component of the company's turnaround. And as you know that while you called out the percentage, it is not going to happen in one time or 1 year. The dilution may happen over a period of 3 years. And we believe this will be one of the most critical attractions for attracting the right talent to the company.
All right. Regarding the 20 million of debentures you haven't yet collected, Royal Front Investments was supposed to buy the 20 million stake from Fitzroy during Q2, but it seems that this hasn't happened yet. So could you give an update on the situation?
Yes, the RFI has, we are understood that has exited the consortium, and the Fitzroy will complete its investments by the committed date of Q4 2025. This is the information we have on that.
Okay, so we could end the interview. You gave a guidance for free cash flow in H2. So what are the main drivers for the improved cash flow in H2 and overall the outlook for H2, if you could recap?
Yeah, I'll take that, Ronnie. Thank you. Our key focus continues to be driving profitable growth. We have definitely enhanced our guidance, not only on revenue and EBIT, but we have also added a free cash flow guidance this time. We believe we have 3 strategies for growth. One is definitely expansion into North American market, look to create a strong opportunity pipe, have more SI-led contracts in these emerged mature markets, continue to build out a healthy order backlog, and increase our recurring revenue capability. So those are all our growth strategies. We also have a very competitive product portfolio. We have continuously invested in growth areas, and we are seeing a good uptake in our innovation and vision that we have set out for ourselves. Today, I talked about a new product that we have brought to market in a timely basis to help with the European Union AI Artificial Intelligence Information Act, which really talks about AI trust, governance, and transparency. So the Sensor certified product is poised for growth in the European market. We are also continuing to invest in cloud technologies, working closely with cloud companies like Microsoft and Google to ensure that our data stack and digital transformation platform is cloud agnostic, so it can work with any cloud vendor. We have very competitive pricing and a lot of industry and analyst recognition. Finally, on profitability, we will continue to focus on the OPEX control and cost optimization plan. We will continue to watch and work with number of financial institutions in terms of Forex mix risk mitigation strategies. We will continue to focus on profitable growth with free cash flow. And I had covered in my presentation that we will be very vigilant about capital expense rationalization and rationalization of technology and R&D spend. So with these focuses on revenue, focuses on a competitive product portfolio, and profitability, I think we are well armed to complete the guidance we've given in 2024 for H2.
All right. Thank you for your answers, and I hope you all the best for the rest of the year.
Thank you.
Thank you, Roni.